is purchase order. When the goods are returned to the supplier for an account of poor quality, if the quality of the goods we purchased are not good, we can return it to the supplier. It is written under the head of purchase return. In purchase return, a debit note is prepared by an accounting department. While in purchase return, a debit note is prepared by the accounting department. Purchase return are entered in the purchase return book against a debit note. In respect of the purchase return, the duties of an auditor are below. So, in the purchase return are done in the case of the goods are in low quality or poor quality or defective. It is done written under the case of purchase return. In the case of purchase return, what are the duties or the functions of an auditor? The first one is correspondence with the suppliers regarding the return of goods, inspection notes, sell debit notes, the entry in the purchase return book with the corresponding debit note. So the first duty is to correspondence with suppliers regarding the return of goods. The second one is to the debit note contains the same pricing method as it contained in the supplier's invoice. Next is to check the debit note and the price in the supplier's invoice are the same. Third is the supplier's account is debited with the same amount as entered in the purchase return book. Third point is the supplier's account is debited with the same amount which is entered in the purchase return book. The amount should be same. The fourth point is the supplier is paid only the net amount. After making the purchase return, the supplier is paid only the net amount. These are four duties done by the auditor. The auditor check these four cases. One, the correspondence with the suppliers regarding the return of the goods. Second one is the debit note, and the auditor check the debit note contains the same pricing method contained in the supplier's invoice. Third, the auditor check the same amount is debited in the supplier's account and entered in the purchase return book. And fourth point, the auditor check the supplier is paid only the net amount. Otherwise, it is improper. The supplier should be paid only the net amount. Next is sales return. Sales return are the returns done by the customer while after making the sales. If the goods are have poor quality or any defects, the customer returns goods to us. The customer may return the goods on account of poor quality or defects in the goods sold. These are entered in the sales return book. So the while making the sales, if any defected goods are there, the customers return the goods to us. These are recorded in the sales return books. It is against the credit note prepared by the accounting department. The goods receipts bags are also entered in the goods inward register. While making the sales, after making the delivery of the goods, we return in the goods outward register. Here, while making the sales return, the goods received back are entered in the goods inward register. Well, below are the points are the duties done by the auditor while checking the sales return book. The first one is the entry in the sales return book with the details of the corresponding credit note and the entry in the goods inward register. The first one is to check the same entries done in the sales return book and the credit note. The second point is details of the credit note and ensure that the amount been calculated correctly by cross-checking with the original invoice. Next is to check the calculations are done incorrectly with the help of original invoice. The third one is the customer's account in the ledger is credited with the exact amount as entered in the sales return book. The third point is the same point in the purchase return. The customer's account in the ledger is credited with the exact amount entered in the sales return book. The amount should be same. There should not be any difference in the amount. Fourth point is the sales return towards the end of the accounting year where possible manipulated is higher. The sales return book maybe it is very possible for manipulation. So the auditor have to check whether there is no manipulation done in the sales return. The next is bills receivable. The auditor should consider the bills matured, bills discounted, bills in hand but not matured, and the bills dishonored. So the next head is bills receivable. Bills receivable are the it is equal to cash. It is liquid less than the cash. The auditor should consider the bills matured, bills discounted, bills in hand but not matured, and the bills dishonored. These bills are to be checked by the auditor. The first point is all bills matured. The auditor should verify whether the payment received is recorded on the receipt side of the cash book. So money is received through a bank. He should say the case of bills matured, the auditor should verify or check the payments received are recorded in the receipt side of the cash book, or otherwise it is done through the bank. The auditor should check the passbook in the case of bills matured. The second one is he should check the entries in the cash book and the passbook of the bills discounted. While making the bills discounted, the auditor should check the passbook of the bank and the cash book. The third point is bills in hand not matured should be physically verified by the auditor. If they are deposited in the bank, a certificate to that effect should be verified. Third point is in the case of bills in hand are not matured. So the auditor should verify the bill and to check the effect of the certificate. Fourth one is in the case of dishonor. For the bills dishonor, the auditor should see that it is recorded in the financial book. So in the case of dishonor, the auditor should check it is done in the financial books. Fifth point is he should see that the liability of bill discounted is shown as a contingent liability. So these are the 5 points in the bills receivable. The duties done or the duties performed by the auditor in the case of bills receivable. The first one is while the bills are matured, the auditor should verify the payment received are recorded in the receipt side of the cash book, or if the money received through bank, he should check the passbook. The second one is he should check the entries in the cash book and passbook in the case of bills discounted. Third point is in the case of bills in hand not matured. So he should verify the bill physically and should verify the certificate of the effect. The fourth point is in the case of bill dishonor. Sometimes the bill may be dishonored. So in that case, the auditor should see it is recorded in the financial books. Fifth point is he should see that the liability of the bills discounted is shown as a contingent liability. Next is bills payable. Bills payable. Bills accepted and recorded in the bills payable books may be of two types. So in the case of bills payable, we all know about bills payable, which are the company has to pay to the suppliers while making the purchase. These are the liability to the company. It have to be paid before the due date. Otherwise, if it is dishonored, we have to pay the fine or penalties. Bills accepted and recorded in the bills payable book may be two types. There are two types for recording the bills payable book. Bills on which the payment is paid on the due date. Bills which are not yet matured. These are the two types in which we are recording in the bills payable book. In the case of purchase, the payment is paid in the bill. The auditor should check the cash book entries. So while making the payment through bills, in that case, the auditor should check the cash book entries. All bills not matured, the bills payable book should be checked and the necessary statement of account submitted by the creditor should be referred to. So these are the duties in the case of bills payable. The auditor should check the cash book while making the payment through bill, and also he should check the accounts submitted by the creditor. In the five cases, we see the duties of an auditor. In the first one is credit sales. The duties of the auditor are: first one is to verify the internal control system is sound and proper. Next is to verify the amounts in the or the invoice, the details in the invoice. Next one is check the calculations, amount, trade discount allowed or charge that sales tax are correct. Next is to check the sales daybook whether any cash entries, cash sales are recorded in that book, and also also be sure that no credit sale of asset is entered. The seventh point is the auditor may obtain the confirmation from the debtors for the balance due at the end of the year. In the case of purchase return, the duties done by the auditor are: check the correspondence with the supplier regarding the return of the goods, and to check the debit note containing the same pricing is contained in the supplier's invoice, to check the supplier's account is debited with the same amount entered in the purchase book, and the fourth point is to check the supplier is paid only the net amount. In the case of sales return, the entry in the sales return book with the details of corresponding the credit note. The details of the credit note ensure that the amount has been calculated correctly. Third point is the customer's account is a ledger is credited with the exact amount as entered in the sales return book. Fourth is it is the sales return towards the end of the account year where possible manipulations is higher. So to check whether there is no manipulations happened. In the case of bills receivable, there are three cases: bills matured, bills in hand not matured, and bills dishonored. In the case of bills matured, the auditor should verify whether the payment received are recorded in the receipt side of the cash book if the money received through the bank, to check the passbook, and he also checked the cash book and passbook. The third one is in the case of bills in hand not matured, so the auditor should verify the bills physically and to check the certificate of the effect. Fourth is in the case of bills dishonored. In the case, the auditor should see the record. It is recorded in the financial book and should be in the liability, or the bills discount is shown in the contingent liability. Next is bills payables. Bills payable are recorded in the two types: bills on which the payment is paid on the due date, and bills which are not yet matured. In this case, the auditor should check the cash book entries. In that case, the auditor should check the cash book entries. All the bills not yet matured, the bills payable book should be checked, and the necessary statement of the account submitted by the creditor should be referred to. I hope it is clear. Thank you.